Thank you, Mark, and hello from London. Last week saw an interesting week of technical patterns. Some were supported by related markets, others seemingly deliberately not so, which speaks volumes when you see such actions and obviously when you do not. Anyway, this week we saw a weekly key reversal up in Chinese yuan against the Japanese yen. Now, is it just me, but if you look at this on a daily chart, does it not very much look like a possible bull flag formation stretching from late September and up to date? I did a preliminary measurement for such a pattern and it seems to indicate a possible target X in the 1860 area, up from the current levels of just under 18 even. There has as well been some follow-on higher to this pattern. We also had a weekly key reversal down in US dollar against the Chinese yuan, the onshore Chinese yuan. This was not replicated in even the US dollar Chinese yuan offshore Chinese yuan, nor in the onshore Chinese yuan 1 year NDF. There has been a limited follow-on lower to this move this week. I guess this is one of those situations when the absence of evidence may well speak volumes. Meanwhile, in the energy markets, we had a weekly key reversal down in NYMEX heating oil futures, a somewhat counterintuitive action given we are heading into the Northern Hemisphere winter. There was a follow-on lower on Monday, but since there has been a recovery of sorts, so the jury is still out on this one. Now to one of the most interesting pair of charts. We had weekly key reversals up in both New York coffee futures and London coffee futures. In the New York contract we had a limited, if sustained, follow-on higher this week already, though the top side seems to be capped by resistance based around the October 2014 high at 229.15, though it actually is giving way as we speak. Meanwhile London, well, London is moving higher within what looks like a large July to date possible rising wedge pattern, which is fine. However, the response this week to last week's weekly key reversal up, I have to say, has been at the least disappointing. The only comfort bulls can gain here is knowing that one should not measure weekly patterns by just daily changes. Next is my favourite chart of this weekly cycle, and it is a specialised one in the sugar markets. It is a weekly chart of the sugar white premium. This had a weekly key reversal up last week, as well as a bullish engulfing pattern. But what was interesting about it was its nature as a third countering weekly key reversal up. What that means is this. 4 weeks ago we had a weekly bearish dark cloud cover pattern. 3 weeks ago we had an immediate countering weekly bullish double pattern. 2 weeks ago we had a counter to the counter weekly key reversal down and bearish engulfing pattern, something I reported upon here at the time. Finally last week we had an even larger third countering weekly key reversal up and bullish engulfing pattern. So what does this signify? Well, to me it means an immense level of indecision in this market, not just on an intraday basis nor even an interday basis, but on the large scale interweek basis. And I've got to tell you right now, though we are not on for a weekly key reversal pattern this week, at least not just yet, we are nevertheless looking currently at a fourth countering pattern, most probably a weekly bearish harami, or so it seems. Lastly, I have a whole series of related and in one case not related weekly key reversals up that I've grouped together. They are weekly key reversals up in Chicago wheat futures, Paris milling wheat futures, Kansas City wheat futures, UK wheat futures, and an unrelated one, Paris rapeseed futures. As I've said earlier today and also in earlier commentaries as well, one cannot judge weekly movements by just the next few following days. But it is interesting to note that we have had limited moves up since last week. Chicago wheat futures, and in the case of Paris milling wheat futures and UK wheat futures, we've actually exited some bullish dynamic patterns, namely bullish Andrews pitchforks, that have been driving the respective markets higher since the start of the summer. These are the ones to watch, and carefully as well. I'll finish up with an update. I've been speaking about some of the Baltic freight indexes ever since I saw a series of weekly key reversals down some 3 weeks ago now. I'll just finish off with an update on one of the major movers in this, the Baltic Exchange Panamax Index. You see, I pointed out a weekly key reversal down here 3 weeks ago at the time of my initial broadcast. The market had dropped about 16%. Last week it was down from its height about 28.7%, with what looked like at the time signs of leveling off. Well, that leveling off lasted only 3 sessions, and we are now down as at close of business last night some 38%. Yes, 38%. In just under 3.5 weeks. Now, this could also be a double top, and this hesitation could be a halfway hesitation of sorts, and we could see prices down into the low 2000s. All I can say is, eat your heart out, Bitcoin. That's it. I'm always happy to answer any questions with anyone who's interested, and with that I'll finish this section from London, and I hope you found these comments useful.